Good evening. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the 18th of May, 2021, and we're right now around 6:15 in the evening. So we're down a bit in the stock market. You know, this could be the sell May go away pattern. If you mark off on all your stock indices the high of May, you've come away from it. That is one of the seasonals that go in there for the reasons. Well, there's multiple reasons. It used to be families would go away on vacation. Traders just turned their attention away. They've worked all the time and they want some time off. Problem is, this year is so different. Why? Pandemic. We've been home. So I wish I could tell you, gee, but we've been on a vacation in some form. I work more hours at home, but you're still at home. And that's the difference. I was never a work-at-home person, and suddenly I love it, but it's the way that it works. In the metal markets, I'm watching gold hang on, but most of the other metals got up to a high enough level to be problematic. I'm not bearish at all, but I do think copper near 480 is a bit rich. The market can sink back here. I could even make an argument into the 460s. I'm not bearish. It could correct. When I take a look at the energy markets, I'm hating to hear that the Biden administration might be giving ground with Iran again. I mean, I just got to say it. We got burned once between Obama and Biden. It looks to me as though they want to do something, and I only say it because Russia sort of let the cat out of the bag today in Vienna. And I think it was Vienna, and they were talking about the commission, and there'll be an announcement this week. Could it be that the U.S. is going to lift sanctions? Well, if they do, I pray that they're very moderate. The Iranian government, I'm not saying the people, I'm being very careful here in my statement. The Iranian government is not to be trusted. The people, I must tell you, I have a lot of Iranian friends. They're wonderful people, a lot of them. One of my closest friends 30 years ago taught me the real estate business. He was just phenomenal at it. And his father came here under the Shah. It was quite interesting. Okay. So as I look at what's going on in Bitcoin here, the market down 790. Okay, it's still under a lot of pressure. But as we go to the stock indices, you're starting to mount a more serious decline gradually. I want to use this word gradual. If we go to the peak, and that's what you want to look at, you came down last week from it 1.33%. You're now down an additional 1.14. So if you want to call a total of 2.5% off the high a serious break, I'm not in your camp. It is not a serious break, but it is a correction that is taking place. We see it on the charts. The market is still very much caught between the rally high it made here and this break low. That all happened in a 4-day period, and you've been caught in that action ever since. The trend is defined by the swing line turned down today. You now have lower highs, lower lows. That is bearish. The market is under the 18-day average of closes. I think the pros are going to take short sales in this market against that number. I think if you get over 41.79.5, they'll put up their arms and say, I'm wrong. But that's not a terrible risk for them. What might they be looking at? Well, the moving average of the 100 days way under the market, but the Bollinger Band is a likely target at 40.85. And again, that's the May high so far, and you're working in this pattern down. So I am not, and I don't want you to take me when I say sell May go away means I've joined the bear move in the market. I am in a corrective mood, and if you take a look at the weekly chart, you get a different picture than here. But as a chartist, this is bearish, and when you take a look at momentum, it's trying to point down. I think the pros are going to sell into this market looking for that number. In the NASDAQ, the market is now in oversold territory. Yeah, you've got a readings under 30. So the trend is down. You've had that for a while. You've stayed under the 18-day average of closes. And the first battleground has turned out to be the 100-day average of closes. Now, if you let go from here, and I don't know if you will or won't, the lower Bollinger Band comes in play. Should the market get up and over 13,448.50, I look for wherever that 18-day average is to be the next resistance point, and any close over it could capture people that are getting overly bearish. I hate when you're oversold to be telling traders, oh, I think fresh shorts are coming in. In the Dow, you got what's called one of these ugly patterns suddenly in the market. Up until today, the market was fighting a battle trying to figure out what next. This is how we finished last night. So we had lower highs, lower lows, but we were over the 18-day average of closes. The market goes up, makes a higher high, captures those that, maybe that's where the buy's coming in. It shouldn't get back under this 18-day average. It does, and it breaks through that low, and you're getting the follow-through right here. You're in that churn area. And, the two parameters out of it are the upper and lower Bollinger Bands and the churns right here. This is not the place to be, in my opinion. And in the Russell, you're fighting at the 100-day average for the support in that market. The trend is down, lower lows, lower highs. Again, I think the pros are going to short now. I think that with today's action that confirmed from this is yesterday, this is today, and now tonight you already made a lower low. The pros will probably probe that 18-day average, just like in the S&P, but I doubt they'll let the market run on them over the highs that we made today. When you get outside days, you pay close attention to those highs. Take that out, you can get a big surprise and run for the month's high. In the VIX cash, 18-day average, again, battleground. So this market is now in an uptrend, higher lows, higher highs. The break today at 1881 didn't take this out. Should the market be able to clear 2160, can it stay over? It's the first question. And if it goes to 2461, that means there's more pressure on the other markets. It's not an outside day. You're just caught in that parameter right now. In the 30-year bond, you're very oversold. You can see that. You don't need me to do much here. Lower highs, lower lows. I do not think that's going to attract new short sellers, but there's no reason to be long other than you're picking a bottom. The trend is down and the bias is down. 10-year note, battleground, 18-day average of closes. If you can't see it, call me up and I'll come over and we'll open your eyes together. Look at how you're going sideways in this pattern. Remember what I call this trade. You've heard me say it, the psychiatry trade. You need your number of your psychiatrist. You go up, that's it, you got him. The market comes right down. You're going down, I got him. Now we're back in that bear move. Goes back to the 18-day average, and you keep doing that until you wear yourself out. How do I know? I've been there. Dollar index, first time you hit the Bollinger Band after getting back to the 18-day average. Think of it this way. When you get back to the 18-day average, it's a reset of all the important numbers on your chart. So the Bollinger Band, if it's hit, is another target. Why is it so important? Because as an algorithm, a market's not going to stay under it more than 5% of the time, 95% of the time within it. So you're at a zone that traders look at like that. You're oversold in a clear downtrend, but that oversold, again, you get guys like me that go, I'll let you guys sell it down there. I don't like selling in oversold condition. Let the market give me a bounce and correct that momentum. In the eurocurrency, it is the flip-flop of the dollar. Overbought, first challenge of the band. And here you hit the upper band, came back, there's the reset, back to it. If you were sitting right next to me, I'd hit you with that elbow. This is where, if you're long, you're supposed to take money off the table. I know you're going to tell me it's going to 130. That's not what I'm saying. I hit you with the elbow again. Now you get the message. British pound, same thing. Now, are we embedding? If you are, it gets very exciting here. You've got both numbers. You can't count it tonight, by the way. So let's go to the close on Tuesday. Both over 80, not both over 80 on Monday or the day before. You're just overbought. What is my rule the first time you hit a Bollinger Band and you're not embedded? Bye-bye. If one is long, that's where I think the pros take money off the table. Bitcoin, this is that gorilla glue trade right on top of this. And it's driving the market down. And no, you don't hear me saying, oh, go short, go short. Trend is down. I pointed that out. I was wondering if we were going to get back to the 100-day average and the support that it and the Bollinger Band had, which was there. Once you got under this number, you caught people. And that's what you're feeling right now. There's a lot of people long this in the 60,000 plus area. By the way, I don't know if you're watching the open interest build in the mini Bitcoins as to what they've got going here. It's phenomenal. The volume daily in 20,000, 30,000, I think. It's getting pretty high. I love what I'm seeing. And I am going to start putting out recommendations now for trading in this, in my paid subscribers. In July Brent and July WTI, you're under the 18-day average. But as I said yesterday, I'm losing faith as to what it really means. We are having no problem getting back and forth on it. I'm not using that as a guide right now. If we take a look at Brent today, you got up over 70 and came cracking back. So why? Let's assume that the U.S. makes some sort of a deal. They'll never lift all the sanctions, but some deal to get the Iranians and step by step to nuclear enrichment to stop in return for something. Well, that something could be crude oil from the Iranians coming back on the market. It might be prisoner swaps. Who knows what it's going to be? It's going to be sanction relief. Maybe they'll be able to bring in more food and medicine. I don't know all the things that are going on. But if oil's in the card, well, they're a country that's devastated. It's going to be hard to say that they can't take their oil onto the open market if the Biden administration makes the mistake of trusting them. We'll see. I know you're going to say I'm being political. I don't trust that government. If you call that political, I'm in that camp. I've said that already. WTI, lower low, higher high. Right back here at that 18-day average of closes, not trending. Rebob gas, lower and low, coming back up over that high. So what do you have? Not much, but we all know this market, if you look at your gas pumps, they're going up and people are going to be driving. You know how many states are now banning, well, I shouldn't use the word banning. They've lifted wearing masks. And how many states? 3 more joined today in saying that they don't want state aid anymore. They want people to go back to work. So they're cutting off that $300 a week come periods in June and July for the average person on those relief programs. That's all going away. What isn't going away is my belief in what I just put together in this course. I think that if you want to be a student of Bollinger Bands and learn the in and out of trading on it, that's what this is all about. Take this course. The cost of it, $75 if you're not a student of mine, $60 if you are. It's a little more than a grain, a penny and a half. It's 5 ticks in a currency on, well, yeah, about 6 ticks in a currency. It's not a big deal, folks. Learn something. Here it is. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.